Welcome to the investment markets overview for the week ending the 17th of June 2022. Investment professionals the world over hang on every word that major central banks utter. And no more so than the world's most powerful one, the US Federal Reserve Bank. But quite why really does beg a belief? This week 3 of them were on parade, led by the Fed, who raised their main interest rate by 75 basis points to 1.75%, the largest increase since 1994. It's worth reminding that central banks have never made a proactive move in their collective lives, they react to market rates, as can be seen within this overview. The US 10-year bond yield, the cost for Uncle Sam to borrow for 10 years and the mortgage interest rate for many Americans, has been moving higher since August 2021, way before the Ukraine conflict and inflation concerns blame for the increase. The central banks are just playing catch-up to the market rates. A subscription to our timing solutions would tell you when interest rates are rising or not and prove far more beneficial to listening to the central banker con artists. The overview includes the performance statistics for the main stock indices, which were lower across the board, as were the commodities covered, and the cryptocurrencies, whilst sovereign bond yields were mixed. Meanwhile, our regional coverage factually confirms the Fed's reactive nature mentioned above. Following the 10-year yield both up and down, the Swiss National Bank's bloated balance sheet has implications for the US financial markets. Whilst out east, we note an interesting leading indicator for the Chinese economy, oil demand. If there is one example of central bank insanity, defined by Albert Einstein as doing the same thing over and over again and expecting a different result, it goes to the Bank of Japan, as they continue to buy all 10-year JGBs in existence, in its effort to keep yields close to 0%, whilst its governor shows confusion over the slumping yen as the bank retains a negative interest rate policy. Again, the markets are sorting this out, as the 10-year yield spiked above the 0.25% line in the sand this week. And the oversold dollar-yen rate looks set to play catch-up, perhaps back to parity, or a 35% jump. This will have dire consequences for global stock markets and for the Bank of Japan. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A 1-month trial of this 40 times per year publication is available for less than $15, a whopping 70% discount. It's an ideal opportunity to grab the bargain for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview. Just follow the links provided, and if you're watching this on YouTube, then kindly give it a like as it helps our channel.